Last week, the VIX went up to a level that has not been since March of this year, and the S&P 500 had a range of more than 170 points. It has not had a range this wide since early March of this year. And the Russell 2000 went below its March low last Friday. So are they indicating the S&P 500 is heading to the March low near 3,800 levels? In this video, we'll analyze the price action of the indexes, the market sentiment, and the internals, the US dollar, 10-year yield, oil, silver, and gold, to see if the S&P 500 is heading down to 3,800 level. Stay tuned. Before we take a look at the price action of the indexes, just do a recap on the performance of the indexes. From this table here, we're looking at the Dow Jones Industrial was down the least for last week, only down 1.61%. And the Dow Jones Transportation down 1.69%. New York Stock Exchange Composite down 1.9%. Russell 2000 down 2.26%. S&P 500 down 2.39%. NASDAQ 100 2.9%, and the NASDAQ Composite down 3.16%. So as you can see, all the indexes were negative. Looking at this weekly chart of the S&P 500, we see the range is 170.54 points, and it lost 103 points or 2.39%, closed below a declining 10-week moving average, and also closed below, it's still ascending 40-week moving average, and also closed below this year-long supporting trend line. And looking at this sentiment chart here, we notice that the VIX closed on Friday at 21.71, and the put-call ratio is above 1. It closed at 1.032. So definitely the market participants are getting fearful now and also getting quite bearish as well. Looking at the New York Stock Exchange internal, the up-down volume ratio, noticed on the first 2 days of the week, we saw a little bit of a buying pressure here, especially on Monday of 6.3 to 1 in favor of the up volume. And also on Tuesday, we're still seeing a 2.69 in favor of the up volume on Tuesday. But then on Wednesday, we got a low report of the housing start is a little bit lower than expected. And then on Thursday, we got jobless claim also lower than consensus. And also on a month-to-month, the existing home sale was down 2%, and year-over-year was down 15.4%. And the Philly Fed Manufacturing Index was -9 versus -7 consensus. Then in the late morning or afternoon, J Powell was having a little chat over at the Economic Club of New York. And he was indicating that inflation is still high, and he feels that the economy needs to slow down to bring it down. And the 10-year yield during J Powell's comment also went almost touched the 5%. And that kind of got the markets start going down. And also the VIX finally put in a 2 consecutive day that it closed above the 20 level. So you can see that the last 3 days of last week, we saw some selling pressure here based on the up-down volume ratio. On Wednesday, it was 4.8 to 1 in favor of the down volume, while the advanced decline was minus 1,984, more declining stock and advancing stock. And then on Thursday, where J Powell was making a comment about the slowing of the economy to bring the inflation down, the number of declining issue outnumbered the advancing issue by 1,773, while the up-down volume ratio was 3.2 to 1 in favor of the down volume. And Friday, the sell-off continued with the up-down volume ratio of minus 3.7 times in favor of the down volume, and the declining issue outnumbered the advancing issue by 1,379. In addition to that, also the new 52-week low starting to expand. We noticed that on Friday, there were 402 stock make new 52-week low, 4 stock make new 52-week high. And from the cumulative AD line, we noticed that it is coming down, making a lower low now. S&P 500 did not make a close at a lower low here on the S&P 500, so we see a little bit of a negative divergence. So I expect to see the S&P 500 to come down and take out this low here, which will be below 4216.45. And in the NASDAQ market, we see a similar type of performance from the NASDAQ. The up-down volume ratio was positive for the first 2 days of the week. And the last 3 days of the week, we saw some selling pressure coming in. Especially on Wednesday, it's 4 to 1 in favor of the down volume, and over 2,200 more declining issue than advancing issue on Wednesday. And then on Thursday, we saw over 2,000 again, more declining issue than advancing issue, and a 3.3 to 1 in favor of the down volume. Also on Friday, almost 3.3 to 1 in favor of the down volume as well, and 1,613 more declining stock than advancing stock on Friday. And looking at the NASDAQ new high, new low, you see that the new low outnumbered the new high by 512 on Friday, or 523 stock make new 52-week low, only 11 stock make new 52-week high. And looking at the NASDAQ cumulative AD line, you can see the persistence in this negative divergence. The cumulative AD line continue to make lower low, while the NASDAQ 100 is still holding above its pivot low here. So definitely the market participants are getting more fearful and more bearish, and also the internals is also getting a little bit more negative. So we should expect a little bit more downside to go. Now, how far it could go down, we're going to take a look at the price action and some of the other instruments and see what kind of price level that we could expect in the coming weeks. Now, let's take a look at the yield. Starting off with the yield curve here, this is the 10 and the 2. So we're seeing the yield curve is coming up, and right now it's sitting at minus 0.159. So who knows, right? Eventually, or getting close to getting uninverted. It appears that the bond market, like J Powell was saying, that the bond market is doing the Fed job by pushing the long bond yield up. And like I said earlier, that the 10-year yield almost touched the 5% level at the end of the week. Last week, we saw the dollar still hovering around this 107 level, and finished off with 106. Still looking at the dollar, the possibility of coming back up to this pivot high, take out this pivot high at 107, and come up to this level near the 108. And looking at the 10-year, you see on Thursday, as J Powell was making his comment at the Economic Club of New York, we see the 10-year went as high as 4.996. And looking at oil for last week, it came back up to this 90 level before it pulled back on Friday and closed at $88 a barrel. I'm still looking for this thing to come up and come up to this level here, somewhere around 97, 98 level. And as I said on one of my tweets, I wouldn't be surprised to see this 100 level get hit. And also for the precious metal, we saw it got a nice bounce last week. So silver came back up and we claimed this trend line. Right now, we can see silver coming back up to this $24 level and possibly make its way back up toward this trend line, or at least get up to this high volume node here, somewhere around 25. And gold had a nice move back up, although a lot of people looking at this as a shooting star that we could see a little bit of a pullback. But I believe the pullback will be very shallow. I expect gold will come back up and take out this level up here at this 2065. And before we take a look at the price action of the indexes, I just want to go back to this chart here, this weekly chart of the S&P 500. Remember last week, I talked about the probability that we could see another up week, or last week to be an up week, based on the historical price action pattern that out of the 5 times that 4 consecutive down week, we saw 4 of them have 3 consecutive up week to follow the 4 consecutive down week, except last December, we saw only 2 up week from following 4 consecutive down week. And you could see last week it finished with a negative week. So what it did is after 4 consecutive down week, had 2 up week and then a negative down week. So it seems like it is repeating the price action sequence of last December. Now, although we still got another week or so before end of October, the month of October so far is negative. So it doesn't mean that we could not see a positive month for the month of October. And this is based on the 2 consecutive down month that most of the time we see followed by a up month, a positive month. So since August and September was negative, we are basically looking at the possibility that October will end up positive. So we'll see. Maybe this will be different and be one of those multiple consecutive down month, more than 2 months, such as this right here, 3 consecutive down month, over here, 3 consecutive, and here is 5 consecutive down month. So it doesn't mean that we could not have, 3, 4, or 5 consecutive down month, for this sequence of price action. But right now, the probability is still in favor of a positive October month, not based on seasonality. If based on seasonality, then it would be more leaning toward the negative. But we're also looking at the probability based on historical price sequence, right? So you got those go counter the seasonality. So we'll see. I mean, there's something to kind of bear in mind that there is that possibility. Probability is not a certainty. Just like we saw from last week, right? There was a close to 80% probability that we are going to see an up week, but it turned out that we had that 20% in play, right? That we had a down week. Now let's take a look at the indexes, and starting with the S&P 500. As you can see, the S&P 500 finished inside of the lower range of last week's expected move, and it broke this trend line as well. So for the coming week, we'd be looking at this range here up at 43.22 level, and at the lower range is somewhere between 41.3650 and 41.05. So we could look at the S&P 500, possibly continue to move down and tag this 41.95. And if we break this 41.95, then we could see it come down and possibly test this lower range of the expected move. If we do get a bounce, we probably would encounter resistance up here near this 43.25. So it'd be up at this upper range of the expected move. And that's where the market is pricing in. So we'll see which direction it's going to go. But right now, with the internals and also the sentiment, it seems to be in favor of a little bit more downside to go. And we should expect to see a test of 41.95. Now, I do put out a trade plan for the E-mini S&P 500 and also for the S&P 500 ETF to SPY on a daily basis. And that will give you a little bit more granular level for you to watch on a daily basis. So if you are interested in that, be sure to go check out my Substack page. And then looking at the NASDAQ 100, you see the NASDAQ 100 is breaking down from this 14,787. And right now I'm looking for the possibility to come down to this 245. To see would it be able to find support here and get a little bit more bounce back up. We are looking at this possibility of this channel here. So I wouldn't be surprised to see a break below this 14,245 and get a bounce back up, back test this, and then continue to work toward this 13,000 level. And for the Russell 2000, remember we were talking about coming down to this level somewhere around the 1690 level. And right now it's booked to it. And we're basically looking at the 1640 level right now, these pivot low here. And we're basically inside of this range. And we're going to see if we're going to be able to hold this level here for support in the coming week and see if we get a bounce back up. And if it doesn't, if it breaks below this range, then we basically are looking for this thing to come down here to this 1500 area here, this pivot low. And for the Dow Jones Transportation, it booked this 14,700 level, and right now basically looking to see what it be able to, come back up. And if it doesn't, then we are looking for the Dow Jones Transportation to work itself down toward this 13,460. And for the Dow Jones Industrial, we see that the Dow Jones Industrial just continue making a series of lower high. Right now, I'm looking for it to come down to this 32,567 and see what it get a bounce. But even though it get a bounce, it's just probably just put in another lower low and then work up to a lower high and continue to work itself down toward this 30,384 area. And for the New York Stock Exchange Composite, basically looking for this thing to come down to this 14,880 and possibly break and come down to this level here, somewhere around 14,400. All right, let's take a look at the ETF, the diamond for the Dow Jones Industrial. As you can see, the market is pricing in the upper range somewhere around 337 for the coming week, and it is near this high volume node here. So we'd likely see this, if it come up, we'll most likely encounter resistance And here's the lower range of the expected move for the coming week. And it is down here somewhere around this 325. So it's in confluence with this 325.82, these pivot low here. So we could see price move down here and see where to get a bounce and maybe get a bounce back up, possibly up at this 331 area, this little bit high volume zone, and then pushes down, back down toward this 314.74 area. So we could see this type of price action here. Now, if we do get a bounce back up, then maybe likely we'll see this as a resistance area at this 337 or at this high volume area near the 340 level. And looking at the SPY, the ETF for the S&P 500, as you can see, the market is pricing in the upper range somewhere around this 431 area here. We do have a potential resistance up near this 434 level here near this high volume node. So if we do see the price come up, most likely we'll see it encounter potential resistance up here at this 434. And then possibly push it back down here at this 420 level here, this pivot low. Now, what we're going to be watching is this level, this 420. If it breaks this 420, look for it to come down to this lower range, somewhere around 409, which is also in confluence with this high volume node here. And we have a level mark off at 411. So it'd be somewhere between that 412 and 409. So that would be the level that we want to keep an eye on for potential downside. And if it breaks this lower range, then look for it to possibly move down to this 403.74 area. And for the QQQ, the ETF for the NASDAQ 100, we see the market is pricing in an upper range between 365 and 364 area here. So we could see price come up and possibly encounter resistance if we get up to this upper range here because it is in confluence with this high volume zone. So we'd be watching this for possible upside resistance. But if it continues to move down, then we'd be watching this 348 level here. Okay, if it breaks this 348 level, then we could see it come down and possibly try to take out this lower range of the expected move, which would be somewhere around 342. Now here at this 340 level, there's a high volume node here. So we could see price come down here and possibly get a bounce back up and kind of ping pong between this 342 and this 348 before it moved back down toward this 333.57. And for the Russell 2000, we're basically looking for a break of this 165 level here and come down to this lower range between 160 and 162 because the market is pricing in to break this level here. So we'd be watching to see would it come down to this 160 and 162 and see would it be able to find some support here. But we are looking at this potential low volume zone here, and that's basically this gap fill here. So be aware of that. If Russell 2000 break this lower range of the expected move, we could see it come down to this low volume zone here, and this will be somewhere around 155. Now on the upside, we are looking at the possibility of 171 up here, and this right here is near this high volume zone. I mean this high volume node here. So we could see it possibly come up and tag this high volume node and then push this back down. So this will be a potential resistance here at the 173.25 area. So with the 10-year having a possibility of moving above 5%, and also with the looming recession, you know, we certainly could see the possibility for the S&P 500 to come back down and test the March low. But how soon would it get there? Well, it's all depend on the geopolitical and the macro events playing out in the Middle East and also, in the global economy, especially in the U.S. and China. So it's all depend the velocity of this downward movement. I'm not saying that it won't get down to the March low, or neither am I saying that it will get there, in the next couple of weeks. But you never know. If we see some kind of black swan event, or if the Fed in the coming month, the next FOMC meeting, and they pull a fast one on us, and instead of a lot of market participant is anticipating a pause and the Fed decide to increase another 0.25%, then that could also maybe shock the market a little bit. But that will all depend on how the price action is going to play out in the coming week. So we'll be watching this 410 level. Okay, this 410 level, 412, 410, that's this high volume node here. And if it breaks below this level here, then we'd be looking at this 403, 404, these pivot low. Once these are taken down, then it doesn't take too much to come down here. Because if we measure where we are right now and come down to this level here at this 410, we're basically talking about 2.5% move. And if we are talking about coming down to this pivot here at this 404 area, we're talking about 4% move. So once we get down to here at this 4%, then all it takes is another, maybe another 4 or 5% move to get down to the March, March low here. We're basically talking about another 5.5% or so. So from here, from where we at right now to the March low, it will take about something like a 9.5% move. Okay, so those are the possibility. And if you find this video to be informative and useful, be sure to smash the thumbs up to give it a like and help promote this video on YouTube. If you are new to this channel, click the subscribe to this channel to show your support. Thank you for watching and stay safe.